CNBC TV18, embarking on a quarter century of excellence.
Welcome back. You're watching Trading Hour here on CNBC TV18, and let's get a corporate conversation going now. Logistics operator Gateway Distriparks has inducted one new high-capacity container train and is looking to have 2 more such trains by March of next year. With this, the company will have a total of 34 container trains by the end of this financial year. To discuss more on this, we are now joined by Samvid Gupta, the Joint Managing Director at Gateway Distriparks. Samvid, good morning. Thank you so much for joining in. And I'd start off by asking you, what is the additional volume potential and the revenue potential that you see with the addition of this in your with this new addition in your fleet?
Hi, good morning. Thank you for having me on your show. So right now we are operating with 31 trains, and essentially by adding these 3 trains, we can increase our capacity by almost 3,000 TEUs each per train. So we can operate from our existing volume of 35,000 to almost 45,000 TEUs. And the average revenue per TEU that we have is about 35,000 rupees per TEU on per train.
Okay, got that. Samvid, thanks for joining us. This is Pavitra. I think when we spoke the last time, you were facing some challenges with respect to the export segment. The northern regions had seen a bit of a decline in the volume as well. Take us through what, demand is really looking like right now. Has there been any change in that situation? And with that, what do you expect in terms of the volume for the full year as well?
Yeah, so imports are still going strong. We're seeing healthy growth over there, but exports still haven't picked up as much as we'd like them to. There are some months where there's an uptake, especially in the US and Europe markets. That's where we've seen the decline, but Asian and African markets are doing quite well. And for the full year, we're still maintaining a similar guidance of about 12 to 15% growth, especially in the rail side.
And is there anything that you can guide us with respect to the exports? Do you have some kind of visibility? When do you expect this to turn? Is the situation at all better than when we spoke last?
It's slightly improved. So earlier we were at about 60% imports, 40% exports. It's come down to maybe 57% imports now. So slight 2-3% improvement is there. Maybe another 6 to 9 months is what we're looking at to see the real uptick up.
Right. You had mentioned earlier as well, Samvid, that your profitability, revenue and margins in the railway business is going up. But now with the dedicated freight corridor coming up, there has been a brokerage note on one of your peers, and it says that the rail share of that peer company is likely to go up to 30% from 18 to 19% courtesy this dedicated freight corridor. What is the impact on volumes you are expecting because of the DFC?
So it's hard to put a number to it. We're waiting for the final DFC connection till all the way till Navasheva to come. But we should see some substantial shift from road to rail. Right now, it is about 25-27% that goes by rail. Railways does have a target to double this over the next 10-15 years. So we want to be part of that story. So part of that, we're increasing our capacity in terms of rakes, road, and number of ICDs as well. So we'll be looking to add 2 to 3 ICDs in the next 2 years.
Okay. We also want to talk about your margins, because in Q2, you did see a dip to around 25.9, and I think earlier you were looking at maybe a recovery in the second half. So is that on track as well? And what is the kind of margins that you can get back to?
So it should be similar number for the rest of the year. Q3 normally sees a seasonal dip in imports, so that will be there. But if you look at it on an overall basis, then we should maintain the same margins that we have for H1 as well.
Right. I have a question in 2 parts, Samvid. First up is an update on your capex. You had mentioned that you are planning capex worth around 300 crores in the next 2.5 years, of which 50 crores you had planned on spending in the second half of this financial year. What is the update you can share on this? And part 2 of my question is, you currently own around 500 acres of land. How do you plan on utilizing that as well going forward?
Right. So on the capex, we are still looking at that number. We've spent about 50 crores of that on adding to our vehicle fleet, as well as building some warehousing capacity at our existing terminals. The balance would be for the construction of Jaipur, as well as 2 new locations that would come in at about 100 crores each. Yeah, so basically that's our capex plan going forward.
And what is the update on the land bit that you want to share on that?
Yeah, sorry. So on the rail side, we basically have enough land bank to go 5x of our volumes. So we are keeping that handy as and when our capacity utilization reaches 60-70%, we do incremental capex to increase our capacity on the ICD side. There are some land parcels which earlier we had mentioned that we would be looking to monetize, but we aren't getting the right valuation for them. So we'll wait a bit and see what to do with that.
Okay, got that. Since you're also talking about your capex, what is the plan on debt? Will you need to take any more debt?
So our net debt is about 300 crores right now. So we're healthy, the net debt to EBITDA of about 0.75. So we will maintain our net debt around 1 to 1.25 of our EBITDA. So we're not going to go right to zero. So it'll be a mix of debt and equity for our future capex.
Right. And what is your plan for growth at Snowman Logistics? You currently own around 43% stake in the company, and you have been substantially acquiring, slowly and steadily acquiring stake in it as well. Do you plan on A, acquiring stake to a controlling stake in Snowman Logistics, and B, what are your growth plans for that company going forward?
Yeah, so on the stake part, we are looking to gradually increase our stake over time. We don't have a fixed target or timeline, but as and when we have free cash flow at the Gateway level, we will be investing in Snowman after Gateway takes care of its own debt, capex, and dividend requirements. As far as growth plans, we are looking to add 2 to 3 new facilities year on year. So there'll be a capex of about 100 to 150 crores. We started a new 5PL division, which is basically providing end-to-end logistics for cold chain customers that we have. So that segment is growing quite well and adding to our warehousing and transportation revenue as well. So on top line basis, we should have about 20-25% growth at Snowman.
All right, Samvid, we're going to leave it at that. Thank you for joining us and taking us through how things are really looking for you right now and how maybe the rest of the year could shape out. All the best for the future, and Happy New Year in advance. That is the management of Gateway Distriparks talking to us about their plans going forward. Right now, the stock is absolutely flat. It's holding up at around 102 right now. That is on Gateway Distriparks. They are still saying that the export segment, which they had spoken to us about earlier as well, that is still facing a bit of a challenge. But of course, these new capacities that they have on board will help them a little bit more.
The stock is up 50% this year so far as well. So it's been a pretty good year for Gateway Distriparks. So let's slip into a short break. And when we return, we discuss market technicals with Jay Thakkar of Share Khan and also discuss his top trading ideas. Stay tuned. We'll be right back.